Welcome to the Loveland Report and Lone Ranger Show. I am Cleve Loveland, Central Florida's best real estate planner, alongside Bruce Woodburn, the Lone Ranger. We're going to talk about your mortgage news. We're going to talk about your real estate news, what's going on in Central Florida's real estate and mortgage market all around, and what's happening around the country. Thanks for tuning in. And this has been, I think, the last couple of weeks, Bruce, I've been busier. How about you?
Oh, yeah. Business has picked up very nicely. You know, it's ironic that interest rates have not really improved much, a little bit. We are definitely going in the right direction. We're going to talk about momentum here in a few minutes, but I have seen business pick up for me in this month. So obviously the enthusiasm for home ownership is up right now.
All right. And I want to talk about a couple of things. I want to talk about how you hear ads for new real estate companies. There's no new truths out there. We're going to talk about, is real estate changing? Tariffs, will they affect prices? I don't know if you talked to your builders yet, Bruce. And then sales in Florida, are they up or down? Around the country, they were down. So we're going to dig into that. But I just want to, every couple months, Bruce, I hear about new real estate companies, and this is nationwide pushes. I'll see it on national news. I'll hear local radio ads about some different way to do real estate. And you know what's changed in 100 years?
Nothing.
Not much. It's still belly to belly. Prices, coaching sellers on prices where they need to be on marketing. There's no special, website that sells real estate faster.
You cannot replace that human professionalism and interaction. And I don't care how good AI gets when it comes to home buying, it just is different. Like you could do AI even for mortgages. We use AI in mortgages all the time, but only for the client that is perfectly ideal. Like the 25% down, 800 credit score borrower, plenty of money in the bank, no weird job stuff, no strange deposits. Everything is simple, and you can use AI.
Couple examples I had.
But most humans aren't.
And that will help. Like we use that at work for productivity, but it hasn't changed us the way I market properties, the way I negotiate. One example, one of the big major companies, you hear their ads all the time, listed a seller. They thought they were going to get a cash offer. And then one day they just showed up at their house and there's a lockbox on their front door. And it took her a week to get a call back on, why is there a lockbox? Oh, we're not going to buy your home. We're just putting it on the market.
What?
Yeah. And then nobody ever called her, told her anything. And they just put it on the market at the price she had said she wanted on the offer. And then didn't hear anything for a couple months. Nobody came to see the home. And then she calls him and says, well, I'm firing you. And took another month for him to get back to her.
Oh boy.
And this is a big name. So, and it's just, there's no new truths out there. You got to be in the market. You can be on the market, but you got to be in the market. And that involves your market position, your price. That involves the marketing. Where's the house advertised at? MLS. I just took another listing a couple months ago, or a couple weeks ago. The seller did not know they were not in MLS.
That's crazy.
And that's why they were their commission. I asked them, what kind of commission were you paying? And they said it was about half a regular commission. And I said, well, you weren't in MLS. That's why nobody looked at the home. That's where the buyers are. And it's funny. All sellers want a record price. Sellers want
they do. Everybody wants the most for their home, and the buyers want to get the least for it.
That happens from when you get a good price for your home. It's because you were exposed to the most buyers and the most educated buyers. And they know that, wow, that is a good price.
Can you imagine AI trying to negotiate your deal when you have emotions from both sides?
Oh, yeah. And AI doesn't know that you can't close till the end of September because your new home construction, and let's list you in April. I mean, they don't know all those things.
Yeah.
All the emotion
There's
comes in.
a lot of moving
That's why
parts.
you and I have jobs on that. How are we doing on rates? You said they're trending a little better.
Well, they're trending. Their rates are trending downward. The bond market has improved. We want the Fed to leave the Fed rate alone. But we have seen
which they did, right? They did last time.
What's that?
They did not change the Fed rate.
They did not change the Fed rate.
And they're not predicted to change it next time.
Rates have improved ever since January 13th. January 13th, we're about at the low. When I say the low in the bond market, which is the highest possible interest rates. And we are trending upward. We've broken above the 25-day moving average, the 50-day moving average, and we are right at the 200-day moving average. If we can stay above the 200 and pierce the 100-day moving average, I think we're going in the right direction. So right now, I see a lot of positivity in the market, and people are starting to see a little bit of relief.
All right. I think things are looking good for Central Florida. When I talk to other realtors around the country, they are getting more seller traffic. Like my seller traffic since the election's up 3 times as much. my buyer traffic's up 20%. So how about you?
Well, I only work with buyers, so everything is buyers or refinances right now, and buyers are probably about 70% of our transactions, about 30% in refinances. So, and why would anybody want to refinance right now? We'll talk about that a little bit later on in the show. But buyers are feeling a little bit more relief. They realize now that things probably won't get that much better anytime soon. We keep hearing people chattering about, oh, rates are going to go drop into the 5.5%. Listen, they may, but we don't know when. It might be a year from now. It might be 2 years from now. There's no telling.
But with inflation, and I'll have some numbers. What's next weekend? No, I won't have next weekend. Be the week after that. We'll have the numbers for January, which will be interesting to see because the pending sales are down around the country. And I'd be interested to see how many sales we have in January compared to January of last year. So interest rates are slightly better than last year. And it'll be interesting to see on that, see if 2025 can beat 2024 and 2023.
Absolutely. So, we've seen some improvement. We've seen people jumping off and jumping into the market. We're starting to see people that have really been reluctant to get in the market because they already own a home and they're sitting on a 3.5% 30-year fixed rate.
Let's make you a landlord.
So we can do that. Yep. But if they need that money, because I'm finding a lot of people like that, they need the money, they need that down payment. So they've got to sell to buy. It's just getting over that hurdle of leaving that 3.5% fixed rate to go to maybe a 6.5 or 7% rate. And they just have had a lot of struggle with that. But now I think they're starting to come to terms with it. And that's just the way things are going to be.
Yeah.
We don't expect interest rates are going to drop significantly anytime soon, but they could get a little bit better.
Yep.
I'd be happy right now if I could just get in the mid sixes and stay there, or the low sixes
instead of the volatility.
Right. Because right now you're bouncing between, say, 6.5% and 7.5%, depending on scores and type of loan.
But it's really important. So if you want to call me about anything real estate planning, call me on property management, selling or buying, whatever your real estate plan is. I'll help you figure it out. 407-352-8118. But Bruce, they might want to call you to get on your VIP list.
Well, they definitely do. We're going to talk a little bit about my VIP list. So I have been discouraging, and I'm the only one in my industry, I think, that's crazy enough to discourage people from doing a refinance in this market. Now, let me tell you why. Because I think that rates will get a little bit better. And I don't want to see people that want to refinance to lower their rate or lower their payment or eliminate PMI do it now and then do it again in 6 months or a year. That chews up too much of your equity. So I created a VIP list for my existing clients that have a higher rate that want to refinance when it hits that target rate. Then I got calls from my radio listeners going, can I get on your list? So I opened it up to my radio listeners. If you want to drop your rate, eliminate PMI, I will add you to my VIP list. Call or text 407-250-9144. That's 407-250-9144. Or go to webringyouhome.com, do an application, and I'll put you on a wait list.
Because there's also, there's a time to do it. And you don't want to do it now. Maybe
if veterans do it right now, let's just say a veteran gets talked into it right now.
Yep.
They cannot do it again for 241 days.
And the main thing is the cost. It costs
well,
1 or 2%.
The lenders will trick you and say there's no closing costs. What they mean is they're going to put the closing costs into the loan.
Yeah.
Okay.
So you don't want to go backwards on that.
You don't want to go backwards. You want to make sure you have somebody that's truly looking out for your best interest. Now, the people that are refinancing right now that I'm encouraging to refinance are people that have equity in their properties, but they're drowning in debt.
Yeah.
They have a lot of consumer debt and they need to get it under control. I just ran a number for somebody yesterday. I'm saving them $2,000 a month by refinancing it.
Yep.
$2,000 a month. That's a lot of dollars.
Yep.
Now, if they applied that $2,000 to the new mortgage that I'm saving them, the house is paid off in 8.5 years. Now, how would you like that?
Yeah.
No debt, no mortgage, 8.5 years.
But they do need discipline.
They have to have.
They'll also
discipline.
be calling you again in 18 months to refi again.
They very well
could.
You
definitely got to have that. Now, Bruce, we back up to, we talk somebody's got a 3.5% mortgage on their old house. They've had that, they've had that for 4 years. and they want to buy another home and they do have the down payment, or they get a small HELOC and take 30 grand. They're going to the 400, they bought the house for 300. It's now worth 400. Rent that one. How do you take that rent and help them qualify for the next home? So
that's
home
a great
number
question.
2.
If you've never been a landlord before and you own a home and you want to keep it and you need to rent the one you have, we can offset the mortgage payment on the existing home by you obtaining a bona fide lease and a security deposit. Now, you can only use 75% of the rent, but provided the rent is 25% more than your mortgage payment, then it's a wash. You cannot use income from that property as a gain unless it's been reported on your tax returns before.
Yep.
Then if you have a gain, that gain can be used. There's no formula because you reported the gain on your tax returns.
Yep.
So there's an opportunity to do that. We're finding a lot of folks want to do that. They want to build a portfolio of real estate. They realize that owning real estate is the key to wealth. And you and I have been teaching that for years on how we established wealth. You got two dummies in the room. We figured it out. We had people that helped us, but we have been able to amass a pretty substantial amount of equity in our properties. And that will bring us through our retirement years and be able to pass on a portfolio of real estate to our children. That's my goal anyway. Now, since Cleve doesn't have any kids, he can leave all his properties to me.
I got a grandbaby. Figure that one out.
That's
so
right.
Anyway, my wife's got a son and we got a grandbaby who's 6, and that's what I want to teach to people, because I wish I'd kept my first 2 homes. I've kept all the other ones since, but I wish I'd kept those first 2. They're literally tripled in value over the past 20 years.
They have.
And the rents would be, and they'd be paid off, because I have to admit, I was a refi-aholic in the 90s, when rates first dropped from, rates had been like 7-8% forever. And I remember just having to stay after the radio show in the early 2000s and just literally, we're just taking people calling going, oh my gosh, we got a refi because rates just dipped into the 6s. So, but I wish I'd kept those homes. But it's just important to build that wealth, and I can show people the right places to do it. Right now, I'm helping a lot of people with their real estate plan. I just did a 2-day conference with all the CFPs in Central Florida, the Financial Planning Association of Central Florida, and talking to all these people about that. And they have, all of them are coming up with problems their clients are having. They manage their portfolios. They're trying to help them make money. And that's the approach I have at Loveland Properties, is to make sure that, okay, you've got, X amount of dollars in the bank. We don't, if you're in your 70s, let's start moving all that money out of real estate.
How many realtors really even understand the economics of building wealth? And how many of them do you think have those conversations with their clients?
I would say I'm probably the only one in Central Florida.
You're the only one I know of that look at your clients and go, here's how we can build wealth, instead of just saying, but yeah, the seller wants this much for the house.
Just like you saying, I don't think it's time for you to refi. I'll tell some people, hey, you've got 5 of these. I think you need to sell one. Let's sell the dog. Get that money to your financial planner. You're 74, whatever it might be.
And we are all about diversification. We don't have all our money in real estate.
No. And so understanding amortization, understanding 1031 exchanges, understanding how to get max rents out of a property. That's what we'll do at Loveland Properties. 407-352-8118 or cleveloveland.com.
Yeah. Or call the loan arranger, get yourself pre-qualified. Let me help you. I've been in the mortgage business for 35 years. I'm one of the top producers in the country. I don't say that to brag to you. I'm just telling you that you've got the right guy in your neighborhood that's here and wanting to help you and your family. 407-250-9144. That's 407-250-9144, or WeBringYouHome.com. That's WeBringYouHome.com. You give me a call, give Cleve a call. We'll get you all set up. We'll be back in 5 minutes with more of the Loan Arranger Radio Show and the Loveland Report. Don't go anywhere. We have more to talk about on the economic news and the housing market. We'll be right back.